Good morning today, guys. So, not gonna be trading today. I'm gonna take it easy. I figured I could use this time to just play around with my footprints, optimize a few things, add a few charts, maybe play around with my TPO profile, just trying to make things a little bit better. I think it's important uh, to change things around every once in a while to see if we can improve. Something about my footprints that I feel like could use a bit more. I don't know what the word is. I don't know what the word is. I think there's just maybe too many colors here. Um, just want to see what I can do. It's gonna take it easy. No analysis. I mean, if anybody joins this live stream has any questions, more than happy to help out. If you guys use Sierra chart, if you guys don't use Sierra chart, why not? Let me know. Just taking it easy, having my coffee. Real quick though, let's take a look at what markets did overnight. We sold off. Yeah, markets made a new low overnight. Clearly we found some sort of support. And now we're back within yesterday's value area. Now we're trading right at yesterday's value area low. We're trying to hover. Very interesting to see what market does here today. We're forming this clear trend line. Minus the few wicks. Delta on the day seems negative, but not significantly. The hourly looks a bit wicked. But you see what I'm saying, guys? Let me post this up right here. You guys can see it. I see it looks ugly. I feel like I don't like this chart too much. I feel like it's very, very bare bones. But I'm not saying that I need to add more stuff to it. I just think, you could tell that I did this very, very quickly. It was very half-ass in the sense, like, look at this value area, lower value area, high green colors. Like, there was no thought that I put into it. I think I did this very, very quickly. And so I want to find a way to just spaz it up a little bit, But we'll do that one by one today. I may not take the full hour or two. I may just play around with it a little bit depending on whether this gets any interest. I don't think it will. I mean, people generally like to see me trade. But I'm more than happy to analyze what I see. If anybody comes on and has a question, um, you know, kind of, hey Greg, what are you thinking about the markets today? But right off the bat, it's a very rangy first half hour so far. We're hovering right below T plus 2. T plus 2 seems to be resistance right now. T plus 1, T plus 2 very tight. Here, this is T plus 1, this is T plus 2, the orange and blue lines. This is just the last 5 seconds of yesterday's close. This is the VWAP of yesterday's close, the last 5 seconds of it. Just trying to optimize a few things. There's too many colors going on here. I'm just trying to figure out how I can start this. Don't mind me. So I'm importing a new file over here typically. I just need to. CR chart has this thing where it won't show you the new chart book unless you specify the symbol for it. I want to see if I can show this. Just give me 1 second, guys. There. The settings page for CR chart. You guys see this when I do this? Nice. Awesome. Okay. So we just gotta change this to NQ. What is it today? Is it NQU? No. Futures, CME, NQU2. Okay. So we are front running. We're September 2022. Let's check this out. Do we like this? Take some ideas off of it, but I'm not too sure if I'm a fan. It looks nice. Rotation volume. So that's not something I had on the other one, or did I? Yeah, I did. I did have rotation volume. So this is a point and figure. Okay, I see. All right, let's do a bit of a comparison over here. What I'm going to do is I'm going to set this to a 10-1 PNF. Oh, wait, no, hold on. PNF 10-1? How does this work? Sorry, I'm just trying to do this 3 minutes. Okay, so what was the setting for a PNF? 10 to 1 PF? 10 to 1 PNF. I'm trying to type this out. Zero chart point and figure settings. So PNF, that's what I did. PNF 10 to 1. That's what I kept typing, right? That's what I kept typing right here. PNF. Let's try it again. So PNF 10 to 1. That's not working. Oh, I think I know why. Oh, that's annoying. Because I my keyboard shortcut, I changed my keyboard shortcut for F. So F is for flatten any trades when I press an F, and so when I'm typing in P and F, Sierra chart thinks I'm trying to flatten trades, so I keep getting this pop-up that says your chart trade mode needs to be enabled for this to happen. And I was like, wait, what the hell's going on? Now I understand. Settings. I'm just trying to figure something out. I want to try something, guys, because I want you guys to see what I see. Window capture. Zero chart menu bar. No, I don't think I can do this. For some reason. That's a bummer. If you see my mouse over here, you see that it's trying to hover up top where the menu is on Sierra chart. And I try to click on, let's just say file, edit, chart, try to click on file, there's a pop-up or there's a drop down that comes up. But you guys can't see this right here, wherever my mouse is hovering. That's okay. Whatever. Whatever, I'm not going to spend too much time on this. So what I just needed to do Was it global settings? Keyboard shortcuts. Creating keyboard shortcuts. So flatten only right here. You see that it says is F. So I think maybe Control F would work. Oh no, that's used by GAN fan. Alt F? Not used by anything. Shift F? Okay. So we'll do that. We'll assign it to Alt F to flatten positions. Now let's try this. PNF 10.1. What? PNF 110? What? 10.1 PNF. Whatever. Alright, I guess it worked. That is so weird, man. So weird. These are 5-minute count. Well, that's what it says. Never mind. Duplicate chart to chart book. And now I'm trying to duplicate it to this chart book. Go back here. All right, so this is a 10-to-1 point and figure. Right. And this is a 110 point and figure. Okay, so that's a 10-to-1 and that's a 110. Look at the differences between these two. Try to make this over here. Jeez. How big was this? There you go. It's kind of hard to see the numbers actually. You see? So this is a 10-to-1. This is a 1-to-10. What's the difference here? Hold on. This is a lot more choppy rotation-wise. I think this is, I don't know if that's what I want to do here. Hold on. Let's try Sierra chart point and figure. Let's read up on this a little bit. I know it's been a while since I read up on this. X's or O's. An X column is created when the price of the symbol is going up. An O column, so these are the up bars, the down bars. One X or O is drawn for each price move of the specified box size input. The box size is specified as a number of ticks where the tick size is controlled through chart settings, tick size. My NQ tick size is set to 1. So each one increment of price, you guys are not looking at this. There you go. Each one increment of price, this is what we're reading at. The box size is specified as a number of ticks where the tick size is controlled through here. For example, if the box size is specified as 2 ticks and the tick size is 0.25, then the actual box size will be 0.50. So for NASDAQ, my tick size is specified as 1, not 0.25, but 1. So each dollar change in NASDAQ for me is 1 tick, so essentially 1 point. Because NASDAQ is so volatile, I don't like using 0.25 or 0.50 tick sizes. So my box size is supposed to be 1. The underlying data in case of the point and figure chart will be study will be the chart bars as they're configured through chart settings. In the case, okay, that's fine. If the price of the symbol reverses direction by the number of boxes specified by the reversal size input setting or more, then a new column is created in the opposite direction. See, so okay. The reversal size in no way controls the maximum number of boxes per chart column. The number of boxes per chart column is just simply depends on whether a reversal has occurred based on the price action of the symbol, so there can just be one box. So how does this work? What comes first? Is it the 110 or 10-1? Where does it say? Oh, here. So input box size. Okay, but that's not what I want. Keyboard shortcuts. So PNF, you're doing box size, reversal size. So my box size should be 1 because, okay, so my box size should be 1 because each point is considered a box for me. And then the reversal size will be 10. So what this means, so 10-1 means that the box size is actually 10, and then each reversal of 1 point creates a new bar. So that complicates things. It's supposed to be 110 PNF. And then you'll have the exact same footprint charts here. Actually, you don't. What the heck is going on, man? Oh my god. Wait. So this kind of confuses things a little bit for me because these are supposed to be the same 2 bars. What in the world is going on here? Now I am really confused. Unless there's something going on here that I'm not seeing. Tick size hasn't changed. Now do you see the same thing? Kind of. Yeah, we do. See, if you look at the rotation volume down here, they're the same. 4080, 883, see? They're the same. No, this is exactly the same. This is what we want to see. But the way the way his volume is set up, everything is a bit weird. So this is volume based on visible bars, which is kind of nice to see. So one thing that I noticed here, let's take out my pen so that you guys can see better. Remove that. OBS Labs. So notice how this volume bar looks very large. This little volume node over here. You know? Let's try to. I want to zoom in on it so that you guys can actually see what I'm looking at. Zoom in on a few. What is this? Why is this green? I need to play around with the settings here and figure out why certain things look the way they do. For example, I know why this volume bar with negative 31 delta, and then you see this volume bar is negative 31 delta. My volume bar over here looks very small compared to this. It's because his volume is not relative to what's being seen on the screen, which is no bueno. So what you're seeing over here, so the volume bars that are being shown over here, the size of these volume bars are drawn based on all other volume bars that's on the screen, right? So this 498 is the largest volume that we've seen here. So it's based on what's relative to what just happened earlier on in the session, which is what you want to see, because you don't want to see um, like a big bar like this over here and then think that that's a significant amount of volume, you know? Good morning, Hefe. Taking it easy this stream. I'm just trying to optimize my Sierra charts, just trying to change my footprint colors, my TPOs. I figured, might as well go live on stream and do that for maybe an hour or so. No trading for me today. Yesterday was I didn't follow my plan yesterday. I think I overtraded, so we're gonna take it easy today. A little bit of a punishment. But if you have any questions, let me know if you're trading. You know, more than happy to look at the markets here together. So one thing that I want to do, actually, I'm gonna add a, hold on, where is this? TPO, Sierra text. I want to add something like this. Obviously, I'll make it smaller, but let me know what you think. Kind of like, I'll have like a little bit of like a small trade counter up here, or somewhere down here, wherever, and I will allow myself, say, maybe 4 or 5 trades a day, right? So if I take one trade, I took one trade out of 5 today, right? And then at 5 out of 5 trades, that's pretty much my final. That's like my limit. No more trades after 5 trades, or something like that. What do you think? That way, I hold myself accountable, and if it's live on stream, then hey, I can't be I can't be a fool live, right? Nobody's ever done that before. Let me know what you think with that. So I just I brought in this new footprint chart, and I wanted to compare it to my footprint chart, and I wanted to see if if I could use this, if I like it. I actually don't like it too much for some reason. It's not that visual. I like the colors. I like the fact that there aren't that many colors, so I might just use that. But I like mine better. I like I like these two columns here, delta on this side and then volume on this side. So what this guy did here, what this chart book is doing, is that it incorporates both. So you have this volume profile, this volume bar, and then the delta is inside of it. But I don't know. Doesn't work too much for me, I don't think. This is using a volume per second. I guess that works. I guess volume per second is interesting, especially when you're looking at it from a rotation based, because then, when you have a high amount of volume per second during that rotation, if it's a large rotation and you have a high amount of volume per second, it can indicate, you know. What do you mean by screen one? Volume and delta number. You mean this screen here? Oh, really? What is it, because of the colors, or is it because that there's just less numbers? Less numbers, eh? Yeah, I hear you. Well, that's interesting you think that way. I mean, you're not wrong though. I mean, I guess, but it's funny because I don't even know how to look at this. I don't even know how to analyze this. Whereas this one, I like it, for some reason. I guess it's just what I'm used to. I do like this though. I like the fact that there are candlesticks on the left side of this column. Do you see that? This is pretty much a candlestick here. Right now this is a candlestick forming, and then this is the wick of the candlestick. Right here, these are the wicks. That's a good indication. Ah, you're used to the right settings. That's cool. I think I'm gonna change the colors though. I feel like there's just too many colors, all this pink and purple stuff. Um, I've shaded the colors here, like the higher volume, the higher delta has darker colors, or sorry, has brighter colors, and then the low volume has lighter colors. But for some reason, I think there's just too many colors going on over here, too many shades. So I'm gonna try to change that. But I like the whole volume per second on a rotation. Um, it just shows that there's been a lot of volume on this one rotation, so that's always good. It's good, I feel like you can get a nice sense of order flow. I'll probably do that. So earlier on in the stream, when I opened the stream up, also I want to change this. I think there's too much going on here. It seems a bit messy to me, this profile. I want to show you this. I don't use it at all. I had it on my screen. I had it somewhere, and I think I deleted it for some reason. So now I have to go back and play with the settings. You know what? Let's try to do it here together. Actually, why not? So what's it called? I think it's called market depth. Historical graph. Do I want a historical graph? Yeah, that's the one. Historical graph. So these are the bookmap settings. Subgraphs. So these are the colors. Whatever. We don't need to worry about the colors right now. I can change those later. Range minimum colors. No, we're doing percentage instead of actual value. Exhaustion, aggressive market orders hitting the bid. So when you say this, are you talking about heat map or are you talking about the footprint on the right side? Because I agree, I really do like the value area high and the POC. Those are really really important. I try to keep this as I try to keep it as clean as I possibly can. In all fairness, uh, but it just ends up looking messy because of the way it is. Maybe it's the colors, right? Maybe I just need to incorporate better colors to not make it look like it's messy. But everything here I actually use, and I try to keep it. I know people say don't include too many lines in your charts, and I try to keep it very very minimal. But these are, for me, these are quite important. Like, okay, maybe VWAP. Do I need to look at VWAP when I have VPOC? I think so. Everybody looks at VWAP. It's quite important. Heat map and footprint. So 3 screens is too messy. Actually, funny enough, I can include a heat map on top of a footprint, or I can include a heat map on top of this. So I'll show you what that looks like. But so do you think this is too much? I mean, look, value area high, value area low. And the thing is, I have it developing, right? So it looks like you have a bunch of lines over here, and I think developing is very important because it shows me that um, we're going up in value. So it's interesting, see, because we're going up in value, but value area the value area low is not going up at all, right? Once value area low starts going up, then you get that confirmation. The initial balance, I think that's very important. My initial balances are set for the first 10 minutes of the day, not the first hour. I find that um, it's something I've been using for about a year now, and it's been incredibly helpful. I think the first 10 minutes of the day is a lot more. So traditionally, it's been the first hour. I don't know if you know much about initial balances, but um, I don't want to assume. But traditionally, it's been the first hour of the day. And I think that's just way too much. That's way too long of a time to determine to wait for 1 hour to have an initial balance. If you think about it, logically speaking, the most amount of volume happens in the first 10, 15 minutes anyway, right? So that's where all these institutional orders are coming in. The most amount of volume is happening in the first 10 minutes. This is a rotation based chart, but let's just do 5 minutes on this just to see. So 9:30, right? At 9:30, we open. Look at the amount of volume in the first 10 minutes. 16,000, 11,000, right? That's about 27,000 plus. And then if you include the first 15 minutes, actually, no, what am I saying? Plus 7, 8,000, that's about 30,000 contracts right here. And if you want to include the first 15 minutes, obviously that's even more. But you don't get anywhere near this amount of volume throughout the day, right? So I've always thought that the first 10 minutes, 15 minutes is the most important to set an initial balance because this tells you who's in charge for the day. So once you get this initial balance um, set, you can have a lot of strategies. And the funny part is yesterday where I went wrong. I don't know if you were on the stream yesterday, but I was I was long yesterday because we broke this initial balance. And I even said on stream, I said that it was around this point right here. It was around this point where I said, and I didn't follow my plan. So I said that typically speaking, when you do a one-to-one extension of the initial balance, so what I mean by a one-to-one extension is, let's just say the initial balance is from here to here. Oh, you were, okay, yeah, whatever. Here to here, the distance between here to here, that's one-to-one. When you tag this one-to-one and you come all the way back below the initial balance, right, two things happen. Either we go up or we shoot down. Probability of us shooting down is a lot higher. And like an idiot, I started buying. For whatever reason, I started buying. I think maybe because of narrative, maybe because I was reading on Bloomberg about Jackson Hole, right? Rally before Jackson Hole and then kind of go flat right before Jackson Hole, and I think I let the narrative get to me and I just started buying over here instead of actually following the plan. Because technically speaking, I mean, this is 60 points right here. Between this and this, it's 60 points. That's one trade. You take one trade and you're waiting. You're writing this out for, I don't know, you enter at 10:40, you get out at around 11. That's 20 minutes, 60 points in 20 minutes where you can just size up over here. Yeah. So I'm just reading some of your messages here. View up is the average or above average or below average price the trade is willing to trade exactly. I tried to view up and all these. I read VWAP and all those indicators as market is willing to make trades beyond a balance zone. It is maybe trying to reach a prior pivot point that it has left somewhere. Yeah, market's always trying to find that balance though, right? Well, volume, it's funny because everybody used to look at volume at time. And then I don't know at what point people started realizing that volume at price was a lot more important. And now everybody looks at volume at price. You barely have people looking at volume at time anymore. Let's go back to this 110 PNF. So what was I trying to do here? Let's analyze yesterday. Because I traded like a dumbass yesterday. I didn't really, I think I was too pigeonholed into, I had tunnel vision yesterday. Yesterday buy point, that's what I meant. It was pulling back, reaching that prior imbalance zone at the bottom and view up is consolidating to move down. Here, you mean right here? Is it this area right here? Where it just kind of pulls back a little bit? And even if you disregard VWAP at that point, one thing that I don't do this enough anymore. I really don't do this enough anymore. I get too tunnel visioned into looking at the footprint and the order flow. And when I get too tunnel visioned, I stopped looking at the bigger picture. Oh, okay. Here. Yeah. But we never even broke it though. That's the thing. We never even broke the low of the day. We tested it, but we never broke it. And I think what we're doing right now is we're trying to continue this move. It was crazy though, because we got rejected really high up here. We came all the way down and we couldn't even break this low of the day. We bounced, we came back, couldn't break this low. Like you could tell what the market was trying to do. I think it was trying to build volume, accumulate positions, and then it was only around the end of the day where we sold off again, but we still didn't break the low of the day. And then overnight, obviously things happen overnight, whatever. And then we opened back. Where did we open? We opened here around, right? At the IB low. So we still opened above yesterday's low. And yeah, we opened above yesterday's low. And I feel like what market's trying to do is market's trying to just rally before Jackson Hole. And I had to buy. So my timing was all wrong. I thought that we were going to rally yesterday. We could rally today all the way up. Maybe not, right? But whatever. I had this bias in my head and I kept trying to push it onto the market instead of just looking, just analyzing the market from a bigger perspective. Because you're right though. Like VWAP was consolidating and it was trying to push right back down. But one thing that I didn't realize was the point of control. It was this point of control here. We pushed up. Point of control is now outside of the initial balance. So this, generally speaking, is bullish. When I see a point of control that's outside of the initial balance, I already know that it's bullish. So any dip is a buy, end of the day, right? This dip, the point of control was up here by this period. When we came down inside of the initial balance, this is the midpoint of the initial balance. Typically, you get some good price action here at this midpoint. This could have been a really nice buy right here for a move up. You could have taken what is this, 930? My God, that's almost 100 points. That's like 90 points right there. And then what should have gotten me bearish was around this point when I went long, but I should have been bearish when the point of control got back inside of the initial balance, right? Because it's quite significant to see the point of control go up and then shift right back down. I mean, this was clear. Like this should have been very, very clear to me. On top of the fact that I said when you do a 1-to-1 and you retrace all the way back inside of the initial balance, very high probability that we at least test the low, if not break it all the way down. Very high probability. This happens a lot actually. Yeah, you see we broke, we did a 1-to-1, but we never tested the low, we just continue going down. Same thing here. Well, yeah, I know I was wrong now, right? Like, shit. I'm a stubborn individual, man. I'm a stubborn individual, and I've read so many psychology books. I think I need to go back to reading one of my favorite books, The Mental Game of Trading. So here's the thing, though, like, psychology is such a huge factor in trading, but people rarely realize it. They know that psychology is huge in trading, but they don't take the necessary steps or the necessary actions to correct their mistakes. For some people, they need to understand why they did what they did when they knew they shouldn't have done it. For other people, they don't care. They just need to put rules and follow those rules. I think I'm in between both. For example, I need to create a rule that says no more than 5 trades per day or 3 trades per day, and I need to stick to that rule. One of the biggest rules that I don't follow, and I feel like such an asshole when I don't follow this rule, is the my daily loss limit. My daily loss limit. I don't follow that rule. I tell myself every time if I lose X amount of dollars today, I'm gonna stop trading no matter what. No matter what, I'm gonna stop trading. And I never follow that rule. I have no idea why. Fuck, I never follow that rule. Do you know these do you know how these funded accounts work? These Lilu and Apex trading? Are you familiar with how they work? I want to show you something. Okay. So, all right, but you're familiar with the whole trailing drawdown and everything, right? Yeah, fantastic. So, I want to show you this part here. Before I show you the screen, so these are um so this is my score or but this is my journal for all the accounts that I've traded up until I haven't updated this for a while actually. Since April I haven't updated this, but I'm pretty sure if I pull in my April data, this number is going to be a lot higher. So these are all the accounts that I have done, performance accounts as well as evaluation accounts, and accounts that have blown up. Well, quote unquote blown up, quote like the accounts that have failed, right? That hit the trailing drawdown, the dynamic drawdown that you said. Okay, so this is with a risk. Yeah, hold on, I'm gonna show it to you right now. Um, right here. So even failing these accounts, right? Quote unquote failing in the sense that you get profit, but then you keep hitting your trailing drawdown. Even hitting the trailing drawdown, I made 30. Well, made right, but like my account was up 30,000 in 2 months. I had a very bad day here, whatever. Don't look at this day. But I think this was an accumulation of like 3 or 4 different accounts at the same time. But anyway, $30,000 in 2 months, despite hitting drawdown, despite getting stopped out. So if I literally put a rule in place where I stop trading after I lose, I don't know, $300-400 a day, like I can only imagine how far I could go. But I never follow this freaking rule for whatever reason. I don't follow this rule. I feel like I need a trading psychologist or something. Like I just want to point out, dude, like I have hit the trailing drawdown. Like I hit trailing drawdown on every single one of these accounts. And despite hitting the trailing drawdown, despite getting stopped out, despite losing these accounts, I am up 30,000. Despite all of that, I'm up 30,000. What this tells me is that I need to set a max daily loss limit.
and respect that daily loss limit, because it's the same thing that's happening with these Lilu trailing drawdowns, is that um it's forcing me to stop out. Like, it's forcing me to stop trading that account. And what it's doing is I have to go the next day and I have to get another account. But technically speaking, if you add up all the trades, I'm up 30K. Isn't that messed up though? I think my oh yeah, my journal I think I was like a platinum user or something, and I didn't pay. Yeah, it is a high win rate, man, but I really need to figure out what the heck is wrong with me, dude. I need a trading psychologist. I keep joking around that I need a special psychologist for trading. Something's holding me back. There's a really good book about it. The Mental Game of Trading. I don't know if you know this. This is a really, really, really good book. So yeah, high win rate. But I feel like I'm holding myself back. Like, I have a lot of potential that I'm not unleashing simply because I don't follow a daily loss rule. 30K in 2 months, man. It's like 100K, 180K a year. But yeah, yeah, I know, man. I know. That was it was a bad day, dude. So, it's messed up because even despite that negative 11K, I'm still up 30K, right? I took an 11K loss and I'm still up 30K. Always have bigger winners than your losers, that's what they say. So I think we rally off of T plus 2 right here. I think if we break T plus 2, we might come back down. So let's analyze this right now. We have a very wide initial balance. Well, 85, not that wide actually. Yesterday was wider. Yesterday was 60. 60 points. We have 55 points of an initial balance. We broke up. We haven't tested the one-to-one yet. VWAP is pushing higher. Point of control is still down here, but VWAP is up here. Hopefully this break today refreshes my mind or something, man. I've been too tunnel visioned. $1,200. Yeah, don't worry, man. You'll get there. You'll get to that 11K drawdown. Don't you worry. Man, I hope one day that your drawdowns are 11K. I hope you get to that level. And I don't mean it in any bad way. I mean, I hope you become a trader big enough that an 11K drawdown for you is just normal. You know? It sure as shit wasn't normal for me, though, so I hope I get to that one day. Yeah, but you know, it's all relative, though. I mean, a $1,200 drawdown could mean nothing to a bigger trader. That's just a regular day for them, you know? Some traders are, they stop at like 10K. 90 evaluations, huh? You're stubborn just like me. But you're persistent. I like that, dude. Keep doing what you're doing. You said you have investor accounts. Do you still have them? Do you still trade them? Have you ever taken profit out of those accounts? That's okay, man. So tell me, how many accounts do you have now, and how long have you had them for? I hear you, dude. Let's do it together, man. Let's you and I. Let's let's take it day by day. So what's your biggest problem? What's your biggest issue? Did you get the 25K, the 50K, the 100K? I gotta talk about this with somebody because I don't have many people I can talk to about this. Actually, I have almost nobody to talk to about this. But I'm curious to see like which accounts do you go for? The 25, the 50, the 100, the 150? Okay, you go for the 50K. Okay. I think, okay, you can disagree with me if you want, and I'll tell you why I think I'm right. Then I wanted to get one day trade and secure the 53K, then they went in draw down. Okay. It happens, man. Like, you need to figure out what your issue is. Like, do you know what the problem is with you? Like, where you go wrong most of the time? Do you size up too much? Do you overtrade? Ah, dude, no, don't do that. Don't do that. I've done that. I have done that. I have let ego get in the way. Man, I remember I remember I had one account, and this is where you see that 11K loss, okay? That 11K loss that you saw, I remember exactly why that happened. I had the 100K Express account. I took that 100K and I brought it up to 120K. 120K in less than 10 days. I had maybe 3 days left, and I said, fuck it, let's see how far I can push this. I said, fuck it, let's see how far I can push this, man. And in one day, I lost 11K because I pushed it up to 120K. And the next day, I had like 3 days left, right? And then I remember the next day, um, I lost 1K. I should have stopped. I swear to God, I should have just stopped because I had a buffer of like 3 or 4K. And then the next day, like the last day, I think I lost like 3 4K. I went down and I capitulated. I capitulated. I was up 20K on that account, and my stubbornness, my ego, wanted to see how far I can push it. And the fact that I lost 11K in one day, even though I was above, I technically still passed. I mean, losing 11K on that account, I was still up 4 grand. I had a 4K buffer on that 100K accounts. I let ego get the best of me and I overtraded. Yeah, 14K of buffer, man. Fuck me, man. I remember that day so well. Whatever though. You live, you learn. Well, fuck. Some of us we live, we don't learn. But you do these mistakes less and less. That's for sure. So now I learned that even it's funny because I've learned that even if I pass my evaluations by $50, I still don't overtrade because of that 14K buffer that I lost because of that ego trip, like because of the whole ego trip that I had. Um, I passed two accounts yesterday. I got the evaluations for them today. Actually, I got the performance accounts for them today, but I'm not going to trade them. I literally passed by 40. I think it was $50. I passed them by, and I was just taking micro trades. I was taking micro trades. I didn't care. I did not give a shit as long as I passed, and then that's when the real trading starts for me. You overtraded. Yeah. So see that's a problem that I have. Not so much now that I used to have before, but it's still a problem that I have. If I'm losing on a day, I'll overtrade to try to make it back. If I'm winning, I won't overtrade. Right? Back then, I used to overtrade regardless of whether I was winning or losing. So I guess you can call it improvement, right? Is that I only overtrade if I'm losing. And I've gotten a lot better. So there's improvement there. But I think that having this little ticker at the top um, will help with that. This little trades thing at the top will help, hopefully. But for me, it's more. I need to create a. I need to create something like this. I'll show you. Something like this. I think for me, this is very important. Like my P&L today is negative three. This is just an example. Like my P&L is $350 negative, and my limit is 500. So like, if you see me go past my limit, then I'm an asshole. Like pretty much, I'm showing everybody that I'm an asshole. This holds me accountable, right? This holds me accountable for my actions, and then you obviously don't want to look like an idiot on live stream and on YouTube, right? And I want to help people, man. Like I've been doing this for a long time and I've struggled a lot. I've gone through so many emotions doing this. Like I know what it's like, man. It's such a lonely game. 3S contracts, 2 point stop loss. So three losses is $500. Well, it seemed to me that he oversized. Like depending on his strategy. I mean, three contracts ES in the E minis, not even the micros. 2 points, like dude, nowadays, like what the fuck? Like 2 points is nothing on the ES. Unless you're a scalper, but if you're a scalper and you're taking three trades, that's scalping by nature requires you take many trades. Well, not requires, but I mean, they go hand in hand. He's 90% scalp, right? So like three trades as a scalper, like if you're a scalper, you love to fucking click, like I remember I tried a scalping strategy on Nasdaq. I did okay, but man, the round turns killed me. So it's just not sustainable. Like I'd take like 50 trades in one day. Like what the fuck, dude? I would be up pretty well, but like the round turns would kill me. So it's like it's just not sustainable as a strategy, unless you're trading with size and unless like you have a very high win rate. Yeah, 2 point stop loss is very tight. Um, it really depends on your risk on your risk management, but yeah. So I want to talk to somebody about this. Like I think for these Lilu, he just wants $500 a day. Yeah, I don't limit myself to how much I want in a day. I don't set a ceiling. I need to set a floor, but I will never set a ceiling. Cause I know traders that can make like 50 to 100K on one trade in one day. Like I know this one trader, he's an incredibly gifted trader, very smart. Um, and he never puts a limit to how much money he'll make on a trade. But he sure as shit follows his risk management rules. So he'll tell himself that um, I only need to risk a certain percentage of my account. I need to take three trades a day max in one day, and I will never break these rules. And he's very disciplined. He will never break these rules. Like if he loses, if he takes three trades, even if they're winners or if they're losers, he will always stop at three trades. So he has three trades. So the rules he follows are three trades max, and then a daily loss limit. And he risks no more than I think 3% of his account on one trade. So all of these he follows when he takes trades. He doesn't day trade anymore though. He doesn't day trade. He'll do it sometimes from time to time, but he won't day trade anymore. He'll take like position plays, fundamental trades, swing trades. But he's a huge trader though. Like he goes in with massive size. So yeah, I'll never limit myself to like $400-500 a day. If I make $400-500, I'll stop, right? Based on a lot of other factors, but I'll never limit myself to that much money. Like you're in this game. Like if I want to make $400-500 a day, man, I'll just work a job that can allow me to make $400-500 a day, and I'll be happy with it. But we're in this game to make like fucking thousands. So I want to talk to you about one thing here. These funded accounts. You have like the whole 25K account, the 50K, 100. I think personally, this is the best. And then this. These two are the best accounts to have. Anything else, forget it. It's a trap. It's a trap. 25K and 50K are the best accounts to have. Yeah, pretty much. It's the profit to drawdown ratio. The 50K is fine as well because it has the second lowest ratio or second highest ratio, however you want to look at it, right? Um, but the 25K, the 50K, those two are the absolute best. Now, when you take these when you buy these accounts, do you use their discount codes? I have a 50% coupon code if ever you want to use it. I have one for Apex and I have one for Lilu. I can put my coupon code in the description for those two. Okay, yeah, same. Me too. 70 to 80%. I know Lilu had like fucking Lilu had like $8 for a 25K and $13 for the 50K like 2 weeks ago. I abused. All right, so see, look, VPOC shifted outside the initial balance. Value VWAP is going higher and higher. Seems to be following this trend line, kind of. So three screens. I already have two. What do you want the third screen to be? A heat map? Well, no, because you say three screens though. So you have screen one. I think screen one would be the footprint. Screen two would be the candlestick chart. What would the third screen be? I have three screens, but like I'm only showing you guys one. I have the higher time frame on the other screens. I guess I do, but not in the traditional sense. Like I look at the volume on a given rotation. I look at mostly the delta on a given rotation. So not necessarily volume spread, but maybe delta spread. I'm trying to figure out why this market depth study doesn't show. It's weird. Oh no, I don't look at that actually. Okay. What's happening on my screen? This is the market depth for some reason. Um, I don't know why it's. I don't know what the fuck it's doing, dude. I think. What the fuck? I think it's bugging out. Color values. I'm trying to figure out the settings here. So I have okay. I just did a heat map here. Obviously, it's going to take some time for the data to populate. But I'll play around with the settings. So we see some liquidity here. I see what you mean. I need to read it better. I'm not very good at reading heat map. When liquidity gets taken, when it gets pulled. But this is not a traditional heat map. I think this should, yeah. I think it could definitely benefit me. I think, I'll see why not. I'll need to play around with the settings. Maybe I can come up with something by tomorrow. But yeah, it did rocket. It's funny because I drew this trend line and I even said that POC shifted higher, so just buy dips, and then the view app's going higher than the initial balance. Like this is a type of analysis, the very simple, basic analysis. There's no need to complicate anything, man. Like you look at initial balance, you look at the volume, you look at value. Value is shifting higher. Like there should be no fucking complications to it. Like these are simple days to trade. It took a wrong day to take day off, eh? 13K is the target. You see something like this, 13K is a target. It's like we're so close to it, you can literally just buy and wait for 13K to hit. No, no, I know that my way works too, but I think if trading order flow, I think it will benefit me to look at heat map. I tried it before, it just never really. I think there were too many things that I was trying to analyze. Like I would look at heat map, maybe I wasn't analyzing it properly. Maybe I was thinking, oh, they're pulling orders, they're bringing orders. What does it mean, etc., etc. I don't like these colors. There are way too many colors, so I just need to play around with the settings, try to make them as clear as I possibly can. Like too many different shades. Exactly. Because I'm trading order flow, I think it could benefit. But I just want to, like, I don't know. I want to make sense to people. Like I don't want to complicate certain things. I have noticed a setup on breakouts whenever a breakout is about to fail. I think I need to do more. I think I need to create a playbook around this failed breakout setup. But first off, let me try to. Have I saved the study for market depth? I have. Interesting. I have saved the study. Hold on. Let me try one thing first. You can tell my brain tries to do like 30 different things at once. Duplicate this chart. I'll show you this breakout pattern on the footprint, something that I noticed. But I don't know if it's something that I noticed, but I haven't done enough studies around it to figure out how accurate it is. But if this breakout fails right now, this is exactly what I'm seeing. And I'll show you I'll show you later, like in a couple of minutes. But I do want to try something. So I'm duplicating this chart book because I want to add a study onto it without ruining this chart book. Um, you can't see what I'm doing. Fuck me, man. So I have a study saved over here, market depth. Apply. What happened? Didn't work. Three black crows, three white soldiers. That's interesting, man. Candlestick patterns. I never. It's hard for me to follow candlestick patterns because time is so relative. It's arbitrary. Like time-based patterns. It's like I think they work on a higher time frame, but on the lower time frames, it's very difficult, man. I think rotation-based is the way to go. Because a wick on a 3 minute could be a full body on a 5 minute. You know, like there's just or like a wick on a 5 minute could be a full body on a 3 minute. I don't know. Like there's just so many. It's very hard to do candlestick analysis on a time based chart. Oh, I see what the fuck happened. Oh, okay, okay, okay. I'm doing this all wrong. Chart, edit, analysis, studies. Yes, this is it. Is it? Yes. So this was my old market depth study that I had on here with the settings. So you don't have that as many colors. Although I don't know what the fuck's happening here. Rotation and order flow. Yeah, 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 for sure. For sure, man. So like I don't even know how to read this. Maybe my settings are not that clear in the set. Like maybe you don't see the colors too well, like the shading. Like this one right here. Okay, there's some liquidity up here, but it should be a lot brighter.
Arrange minimum colors. What do you mean? Oh, okay, so it only uses the max colors over here. Yeah, I think so too, but I also think that I don't know if my heat map settings are visually help. Because right now this doesn't really tell me much. Like I don't know what this tells me. Oh, that we've had liquidity posted all the way up to here. That we've had this liquidity for a long time now. You know, like is that what it's supposed to tell me? Like I need to watch videos on how to read heat map and how to make sense of a heat map. Because I also think the colors and the shades don't help me visually, right? Because I want to be able to see when somebody pulls their order. I think that could help. When somebody adds on to an order, I think that could help. Like for like here, I don't know if you can see it, but we went from a darker shade to a slightly lighter shade. So did somebody add liquidity up here? I need to change the settings because it's not very clear the distinction. Yeah, limit orders waiting. And then I guess when it becomes brighter, depending on the settings that you have when it comes brighter, somebody's adding on there. And then if it goes from light to less light, then they're removing liquidity off there, which means they pull their orders. Yeah. So the thing about Sierra chart is like I love Sierra chart, but at the same time it's so time consuming because you have to set everything yourself. Like Bookmap, I've never used Bookmap, but I can imagine it's plug and play. You have some settings, but it's intuitive, right? Sierra chart, like you need to go in every detail to try to make it how you want it. Anyway, I'll play around with these settings. I'll see if I can use them. Never worked for me in the past, but maybe I was using them wrong. So this is interesting. This could have been a failed breakout based on what I saw, but it got picked up here on a bid. I want to show you. Hold on. Let me minimize this. 10:30. Could that have been a breakout we could look at? I don't know. No, there were too many wicks here anyway. Let's go look at a failed breakout. 10 o'clock? So the one at 10 o'clock was pretty interesting, but it's not the setup that I typically see. But it's interesting, we can analyze the one at 10 o'clock over here, this massive wick on a 3 minute where we went up, we broke out of the IB like 30 points and then we came right back down very quickly. We came down hard. So one thing I noticed on the footprint,
But I'm not finding it now. But I saw it in like I think I saw it yesterday. I'm gonna go and we'll come back to the 10 o'clock one. But I want to go and find what point did that breakout fail. Was I trading at 130? I wasn't trading at 130. Was it this one at 10 o'clock yesterday? Hold on. Chart shows scroll bar. I had it somewhere. Let's remove this. There was a breakout I traded yesterday that failed. I think it was this one. I think it was this one here. 1009. So I noticed that when you have a breakout, you see this level here technically was supposed to be a breakout at 980, like at 12,980. We made a high and we wanted to break out of this high on this candle right here, this candle at 1009, which is kind of what you see here. And I don't know why. I think we can analyze this, but this breakout shape, I've said it so many times. When you see a breakout on a footprint, you want to see on a footprint and a volume profile, you want to see a P shape. This is great. When you see a P shape, it's great because now you have a level, you have this type of floor that gets established, and you get volume that starts building. And you can go long here, you can go short here, and if it breaks, you're great. If it doesn't, but I would typically want to go long here, right? Because I think it's better. You can go long anywhere in this range for a breakout to the upside as volume builds up here. But what I noticed is when you get a profile that looks like this, that's not a P, but kind of like it's just a fat profile all around. And I don't know why. I don't know why. I'm trying to analyze why, because let's think about it. When you get a P shape, oh, that's a bad P. Yikes. When you get a P shape, what happens is you have a lot of guys getting stopped out and then volume building. And so a lot of guys down here are just trapped. But why is it that we get failed breakouts when it's a fat profile like this? Where it's just, instead of a P, you have this big, kind of like a D, you know? And I noticed that typically speaking that we tend to come off of it. But you'll also notice that this could have been a P, right? You see this level, like this, after a breakout, it creates this type of consolidation or this type of floor. But it's not as clean because you have a lot of volume down here. On a traditional breakout, what you want to see is you want to see no volume down here. So no willingness to transact any lower. These guys got stopped out, that's it. Now we start to build volume up here. But what's happening here is that you're building volume on the way up. So maybe people are not getting stopped out. And so price is more likely to retest those areas because there's volume, right? Could that be it? I don't know. You see, we came down and then we just capitulated. There's like too much volume, too much going on over here. Too many traders in positions over here that if it doesn't go up and it starts to come down, it's just going to fail from there. And that's what happened. Just came like we crashed. Maybe because there was just too much volume up here. I don't know. I don't know. It doesn't seem like it's significant. 8K is it is a lot of volume, but let's try to find other breakouts that failed and see if we can find this pattern. I think this is too early in the day to consider this a failed breakout. I don't think it broke out of anything. Maybe this? We tried to break out, we failed. I don't know. We can look at this. 1036. The structure is definitely not the same. 1036 on Monday. Yeah, kind of. I mean, we didn't even create a P over here, you know? This was clearly a level that we wanted to break out of, right? Market's coming off. You find this level, you want to try to break out and continue higher. You get the structure, right? You don't get the traditional P that you would normally get. Instead, you got this D, like a fatter profile. And we didn't really create any type of level, you know? We didn't create a floor. We rotated right back down, tried to go back up, and then... And so this is this is interesting. This is the opposite. This is the opposite right here. This is a breakout to the downside, and this is what you want to see. This is like a reverse P. It's a B. Yeah, it's an inverse P. You create the ceiling. Low volume here, comes down pretty fast, low volume. You create the ceiling. You go, you short right here. You short here, you put a stop somewhere here because NASDAQ is not, you know, NASDAQ is more of a zone, not really a tick by tick. You can put it like a 5-10 point stop here, a very tight stop. And you're trying to play the downside. The same way you'd do if you wanted to play the upside. Here, this was another inverse P. This one was too. If you took this trade, you would have gotten stopped out at a very tight stop. In a way. But it didn't break out of this rotation too hard. If you consider this the rotation, it didn't really break out too hard. But this is what you would want to see typically, right? You'd want to see it come off. But it came off by like 6 points, 7 points. That's nothing on NASDAQ. Whereas this second one came down quite hard. It came down like 13, 12. What am I saying here? 17 points, I think. You know, so this was a stronger inverse P. So you can look at this and say low volume. We built volume here. You short the top. You put a stop up here. And you write it down. You write it down, like you can take like maybe, I don't know, 2, 3, 4, 5 contracts. You take some off at the lows and then you leave the rest to write down even further. Continues. You create another inverse B. Inverse B, sorry, like an inverse P. Like a B. Let's call it a B. You create a B. Go down. And see, interesting, does this reverse from here? Yeah, this is around like 3 o'clock though. This is 3 o'clock. This is not a cleaner B. It's very interesting because this is not a very cleaner profile, right? You have this massive down bar, right? But there is volume along the way, significant volume along the way if you think about it. And then price doesn't necessarily respect the ceiling. You get more choppiness because of the volume that was built down here. Like on the way down, you get more choppiness. I think if you saw something like this, like very little volume and massive volume, then you can accurately create a ceiling. Short for a continuation down would be a good trade. I want to look at more examples. This could be a really good setup. Good setup to find good breakouts, and then setups to find failed breakouts. Oh, this was kind of like a failed breakout, no? Maybe. Came down, came right back up. Let's look at the structure of this profile here. Friday 19th at 1:30. Went down too much. Oh, that was messy, dude. Oh, but this was kind of a weird rotation, though. I think the 110 rotation wouldn't work because we never even yeah, this was at 1327. So this was since 13, this was since 119 around here. So obviously we never even created a new rotation up because it's just been it was like one time framing all the way down. But it broke down at around 13260. So 13260 it broke down. Yeah, this is a weird one. The rotations here were a lot tighter. I think maybe this point and figure should change to, I don't know, 1.5 maybe. Let's see. We can do 1.8 PNF. Yeah, you do a 1.8 PNF. You'll see it a lot clearer, I think. Let's do a 1.5 or 1.6 PNF. No, I think 1.8 PNF would work. 1.8 PNF would have worked. It's the same thing. This was just like a bad structure on the way down. You know? It's hard to create a ceiling over here because it's like there hasn't been volume traded down here. Maybe this could be the volume. I guess. Yeah, this could be the volume. But still, maybe not the cleanest of setups. I want to find a failed breakout. This took too much time. I want to see like, I want straight reversal. Oh, that's interesting here. Wednesday. Wednesday around 2 p.m. At 212, there was one failed breakout. Am I looking at the same one? Yeah, 817. So this was good actually. This was good structure. Oh wait, no, we're looking at this wrong. What time was this? 1407. It was around here. This was messy. If you look at it on a 3 minute, it was very, very messy. But it's at 1412 that I want to look at. Still quite messy though. I still think I would have taken the long here, but I would have gotten stopped out for sure. But you can tell it's not very clean. Volume, no volume. I like it. Volume, no volume, and then volume. Maybe the fact that we built volume here and here was the reason why this could have failed. But you could get long here at 88 and then you can get stopped out 4 points. Very tight stop. But then the inverse was very true. You see, okay, so analyze the inverse. Volume, volume, volume. It looked like this. Whereas the inverse was like volume, no volume, volume. You know? You create a ceiling right here. That's nicer. That's much nicer, yeah. This low volume zone compared to this wacky volume zone here. You short here, you put your risks up here. Very tight stop, very, very tight stop actually. And then you can ride this down like 30 points from 70. Say you enter in around like 65, right? 25 points. No, sorry, 35 points. In the span of, well, that would have taken you a while actually, not gonna lie. No, what am I saying? No, 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 that would have taken you in the span of like 5-6 minutes. You make 35 points and you're out. Then we rallied. So this is, yeah, this was not a very clear breakout actually if you think about it. Here at what time? 4:30, 4:32. Whatever, this breakout held, and then here is probably where there was a lot of absorption. A lot of liquidity over here. This is huge. This is one big fat profile. You have no imbalances here. Same over here. I guess you can consider this and this. You can probably, from here, consider this as a P, maybe. But I think because of this, it's not a P. This whole thing could be seen as one big D right here. And then you come off, a little bit of volume, come off, and then you have this. You can create a ceiling here, or you can create a ceiling here if you want. But then obviously your your risk is a lot larger. Your stops are a lot larger. You create a ceiling here, you're pretty much wrong here. But if you put in an entry here, you'll never get filled. So maybe you can play this as you put like half here, and then you have like another 50% of your trade here if you want. But you won't get fully filled, but you'll get some filled. I guess it's better than nothing. And then if you're pretty much short, you're on side for a good while. You were never offside if you went short here, technically. Maybe you would have been offside a little bit. No, you probably would have never been offside. And then you would have felt this move. And then this candlestick right here at 302 is this breakout attempt here. Right, let's take a look at this. You can clearly see it. This breakout attempt here was the failed breakout. And what do we see? We don't see a P. We see one large, no pun intended, D. And then capitulation. And then let's look at this capitulation. I can do a video about this actually. And I think we continued. No, we didn't. We just ended the day here. We ended the day here. But maybe the structure would not have been enough for me to go short here because there was not enough volume picked up. But the fact is this was around 3 p.m. anyway, so it's like the day just kind of died down and ended. Although you can consider all of this area as one big B if you wanted to. But it's not the cleanest of setups because it took a lot of rotations to actually build this volume. You want it to be on one rotation and build the volume like this instead of like creating a new candle. You want it to be on the same candle, you know. But also you built volume here, right? This was this. You built that volume here. Not the cleanest of setups. But you still would have made a lot of money on that initial short. Trying to play that breakout. And then, you know, you could have shorted this or faded this. Interesting stuff, nonetheless. Ooh, what is this? Tuesday at 2. Let's do one last one. Yeah, dude, this is it. This is it. This is the exactly. This was a good breakout. You see? Oh, please tell me you're here, Hefe. Whatever. Anyway, you can watch this back later. But this is fantastic, actually. This was the exact type of breakout that you want to see. Great breakout on volume for a continuation. Nice little P. It looks like a P on a candlestick. And on the footprints, the same thing. Low volume, high volume. You create this floor, which is exactly what you want to see. This floor becomes the bottom of this low volume node. You put a stop somewhere here just in case, because sometimes markets can go like this. And if you put your stop here, you get stopped out. And then you go. So this was a good breakout to take, a continuation, right? You enter in at 90, 13,690. You can get out 30 points later, make some good money. But this breakout was a failed breakout. Very interesting to see because you have this and it was just some choppiness right here. This was not a clear P. There's volume all across this candle. All across this candle, there's volume. You have very little low volume areas. These pockets of low volume are not that they're not that large, and you only have maybe one pocket of low volume. The rest is just filled with volume and like messy volume. So if you want to play the continuation, you definitely could, but it's not the best of setups because you don't have this massive P building up. I think there was an attempt to create a P. There was definitely an attempt to create a P within 2 rotations, but this was not, there was still volume here, essentially. So if you went long, maybe you can recognize that this could fail. Once it starts to fail, you can probably reverse your order and go short, but this is ridiculous right here. Wow. That was ridiculous. But in all fairness, this was Wednesday, last Wednesday. I think FOMC came out last Wednesday at 2 p.m. I think FOMC, yeah, FOMC did come out at 2 p.m. Crazy. We didn't even build any volume here. It just kept coming down, man. That was interesting. You see it on a volume profile as well. This ledge was created. There's low volume here. Typically, market reverses on low volume ledges like this. Interesting stuff. Maybe I can create a video about this actually. Anyway, that's it for me for today. I think it's 12 o'clock now anyway, so I shouldn't be on these charts, even though I'm not trading. But you have 7 days left of trading, so just take it easy, man. Take a few micro trades a day. If you want, take like one micro trade just to just to warm up, just to kind of get that brain flowing. I think that could help. Could this be a failed breakout? Let's watch. Well, I'm not gonna watch. I'm gonna hop off. But let's see if this could be a failed breakout. I think that this is a P for sure here. This is one massive P. So this is kind of what you want to see. Maybe you can go long somewhere down here. You can wait for a retracement because this does look like this can retrace because of the structure. This and this, if you add them up together, can be seen as like this. So it's not the cleanest of P's. So I think if we start to come off below 88s, you can see it trickle down to 60, and then 60 would be a good place to buy, because you don't want to see this go below 68 right here. You don't want to see this go below here because of the low volume that it created on the way up. It's a lot of absorption here by sellers. A heck of a lot of absorption. Heavy delta, heavy buying delta. We're not going any higher. I think this could break out very aggressively. Because of all this volume being built, I think if we go above here, sellers will not be able to absorb any longer, and we can break out really, really aggressively up here. But I think because of the way we've structured this type of breakout, I think buyers can also start to start panicking down here a little bit. So you have some selling that's coming in. Will buyers step out? So if I had a heat map, maybe I can see buyers pulling their orders out, trapping shorts, and then this is maybe where they'll reverse somewhere down here. I'll be curious to see. But that being said, I'm gonna head out right now. I'll see you tomorrow. Thanks for joining, man. Thanks for keeping me company. Um, had a good chat. Tomorrow we come back and we trade again. Take it easy, man. Have a good day, and I'll see you tomorrow.